Welcome to the Kitchen Table Finance Podcast, where we make retirement planning easy and enjoyable. Discover practical advice to create a retirement strategy that fits your lifestyle and budget.
Hey Dave, how you doing today?
I'm doing great, Nick. How are you?
It's another beautiful day in Michigan for a podcast.
It is. It is. It's not Podcast Friday for us, which is
It
a
is
little
not, but the
unusual,
weather
but
is the same as it
the
usually is
weather.
on a Friday in January.
That's true. That's true. So,
Gray and gloomy.
yes.
We've talked about this today's topic before, Dave, but it keeps
Yes.
kind of rearing its head, if you will, and that is the not sure what the right word is for it, but it's Bitcoin, and it's back in the news
Yes.
because as of last week, 2 weeks ago, the SEC has now decided that Bitcoin or similar cryptocurrency ETFs are going to be able to be
Yes.
sold. And there is a handful of them that took them up on that offer.
Yeah.
I don't know the exact count, like 10 or
Well,
13 or 15 or something.
handful. Like the first day they approved it, there were 11 of them that launched.
Yeah.
They were waiting, and 11 exchange traded funds the first day they've been available. Just astounded. To me, that was like, oh my gosh, that's
Yeah.
that's incredible. And so just so people understand, I think what we're talking about here. So previously, to buy Bitcoin, you had to go to an exchange, open an
Yep.
account that handled cryptocurrencies.
Mm-hmm.
And by what's changed here in January is now in any investment account where you can hold stocks, bonds, mutual funds, and exchange traded funds, you can now buy an exchange traded fund that will track the price of Bitcoin.
Right.
You cannot just buy one, you can buy 11 different
Yeah.
exchange traded funds.
Exactly.
That does not mean you're diversified.
11 and counting, right?
Yeah, right. I'm sure there'll be more, and there'll be different crypto. I don't even like to call them currencies, which we'll get to here
Yeah.
as we're discussing it. But
Yeah.
so all of a
Another,
sudden, it's kind of going mainstream is a one way to look at it,
well, it's
right?
been back in the news, back in the headlines,
Yeah.
and it's interesting because, like you mentioned previously, you had to go to one of those digital wallets, and the big one I think is Coinbase, but the other one that's been in the news recently is FTX, and obviously that did not end well, and so I'm sure there's some like skepticism over those wallets, and now you can bypass them altogether. Which brings more access, but remember, when the SEC is approving things, they're not like gold stamping like this is something you should do. It's like this is something you can do.
Right. So that's really what we're getting at today, right? Is just because you can, does that mean you should? Do cryptocurrencies and Bitcoin belong in your retirement portfolio?
Exactly, and thankfully, Morningstar did put out an article that actually looked into this and did a lot of the research and modeling for us. So we will put a link to that article in the show notes. But when looking at it, there's a lot of different things and a lot of different ways to think about it. I guess some of the proponents of Bitcoin and cryptocurrency, if when you're talking about should you put it in your retirement portfolio, are obviously doing it because of some of the potential diversifying factors. And so Morningstar kind of went in and looked at, is it actually helping you diversify? Is it actually reducing your risk, or is it not doing anything for you or making things worse? Right.
And kind of as a backdrop to this, for the first several years, Bitcoin ran up like climbing a mountain in terms of its price. I mean, it was ridiculous how fast it went up, and then got cut by more than half in 2018. It was down almost three quarters, or 74% of its value. And then again in 22, it dropped 64% of its value. So there's been huge gains, huge losses, huge volatility in either direction, right?
Yeah, well, I think that's kind of why it came into the mainstream of people like even knowing what it is. It wasn't because people were deciding to, forego you and
Mm-hmm.
using US dollars or credit cards. It was because we saw these amazing returns in like
Right.
2017. It was up
Right.
1,300%.
Right.
So that all of a sudden is going to get people's attention, even though,
Yeah.
theoretically it's too late at that point, more than likely.
Right.
But
Right.
so that's where it came into the mainstream, and now it's because it's more accessible. Is this something that you should do? So let's talk
Yeah.
through that.
Yeah. So Morningstar looked at it from a diversification standpoint, which
Hmm.
I like, with some caveats. But right. So what anytime we're adding something to a retirement portfolio, we're doing it to diversify the portfolio, right?
Yep.
And so we know, like, if we take stocks as kind of the base, right, the default, and then we look at, like, okay, what happens if we take the portfolio and add 40% of that money to bonds instead of stocks? And we
Hmm.
see that normally they diversify each other.
Yep.
We know that if stocks go up a certain amount, we'll probably see a certain amount of downside to bonds. And it's not
Hmm.
perfect. And we saw that in 2022 that it's not perfect.
Right.
Um, but we look for long-term trends and statistics on how these things behave across whole um, economic cycles of
Hmm.
decades to kind of
Hmm.
determine, okay, if we take 100% stock portfolio and we replace 40% of that with bonds, what does that do? And
Yep.
furthermore, if we take the part that's in bonds and put 20% of that in international stocks, how does that change things, right?
Yep.
And that's how we end up with our, like, nice pretty pie charts of portfolios, is looking at statistically how these things relate to each other.
Yeah, and I
So
think just taking a step back too, Dave, the importance of it is especially related to retirement is most retirees aren't going to go into retirement with a 100% stock portfolio, right?
right.
Like that's the
Right.
time where you want to be de-risking and,
Right.
creating an asset
Right.
allocation that's going to promote or allow you to take an income over your lifetime with less, risk, so to speak.
Yeah. So what did Morningstar find when you start adding Bitcoin to the portfolio?
So, the problem with adding Bitcoin is it's more volatile and that can dramatically shift your portfolio's risk, right? So,
Right.
depending on the amount, so if you're adding 1 to 2% doesn't necessarily have a
Doesn't
big
matter.
impact,
Right.
right? Because it's such a minimal part of it. But when you start getting to 3 to 7%, then all of a sudden you start to see this tipping point, right?
Right.
And I think one of the interesting things that in reading this article is, the source of risk in a, traditional 60/40 portfolio, which a lot of retirees have, right? What's
Hmm.
the catchy name for the 60/40
The
portfolio they
Goldilocks
use?
portfolio.
The
Yes.
Goldilocks, yeah.
Yes.
So the interesting thing is you think 60/40 portfolio, you think, all right, I've got 60% risk, 40%. And realistically, 85% of your risk comes from that 60% in equities,
In the
right?
stock market. Right.
Yeah, in the stock market. And so that's where adding Bitcoin can actually increase that risk. And that,
Right.
5% is kind of the tipping point.
Right.
Once you hit 5% in Bitcoin, it contributes over 20% of the portfolio's total risk.
Right. And then lately we've seen that those risks occur at the same time.
Right. Mm-hmm.
So you're not getting that teeter-totter effect. Instead, you've
Right.
got Bitcoin going down at the same time stocks are going down, and so it's not offsetting that loss either.
Right.
So, yeah, it just doesn't
Yeah.
add. Go ahead.
Yeah, no, it used to be where, when you're looking at Bitcoin, and this is part of the problem of trying to put it in a portfolio because it's such a new
Mhm.
asset class. In the beginning, when it first kind of came out and became more popular, it kind of worked opposite of the stock market, right? The stock market
Right.
would go down, people would put money in Bitcoin, Bitcoin would go up. And
Right.
so it had this diversifying effect, right? That's exactly what
Yeah.
you want from an asset class where you're trying to diversify away from equity,
Yeah.
is something that works in the opposite direction, right? One is
Yeah.
down, the other one's up, and that gives you this
Yeah.
kind of leveling factor.
Right.
Unfortunately, what we've seen more recently is that those things are no longer happening. happening. So when Bitcoin is down, the stock
Yeah.
market's down. And so now it's compounding the problem, not necessarily making it better. And
Right.
because the asset class is so new and so speculative, we really don't know exactly how it's going to behave because
Yeah.
we haven't seen it behave in a lot of different types of
Yeah.
markets and
Yeah.
environments.
Right. So that's the like the scientific statistical analysis of why,
Hmm.
at the end of the day, as of yet, we can't show that it provides any diversification, any lower risk, anything that would be compelling for us to put it into a retirement portfolio.
Right. Yep. So, as a diversifier, it's just not proven, and it
Yeah.
more than likely is going to add risk instead, significantly add risk instead of kind of reducing it, which is
Yeah.
normally what we want in a retirement portfolio.
Yeah. So, some other points of view and ones that kind of inform our own, take on it beyond the statistics, good old well, we'll talk about Jamie Dimon first, who's never afraid to make a bold statement in the press, but he likened he basically said, "Quit bugging me about this." when
Right.
he was asked
Yep.
about it being available in exchange traded funds, said it was basically worthless, a hyped up fraud, and called it the pet rock of investments, which I like because the last couple of years I've always likened it to Beanie Babies and baseball cards, which is a
Right.
nicer way of saying it's a collectible perhaps that has value because other people right now are excited about it. The classic one is tulip bulbs, right? Anybody who
Hmm.
studies the history of stock markets is familiar with the tulip craze of like the 1600s, where tulip bulbs were suddenly worth thousands and thousands of dollars each because everybody was crazy to buy them,
Right.
and then
Yeah.
all of a sudden they weren't, and that's how people end up with like closets full of Beanie Babies that they haven't looked at in 20
Yeah.
years, and that they paid thousands of dollars for. So there's that. I think our friends at East Bay put it a little bit more nicely, if you will,
Hmm.
Mario and Eric. Their point is, don't think of it as a currency. um,
Yeah.
it doesn't have low volatility or widespread acceptance the way currencies do, and there's no central bank regulation, right?
Right.
Um, the regulation of Bitcoin, that's part of the appeal of Bitcoin to a lot of people, right? Oh, it's
Right.
like the
Yeah.
counterculture's currency, right?
Anti-establishment.
But
Right.
but that also means that you don't have smart people controlling the value of it,
Right.
and having it reflect the economy. And I remember, one of the Vanguard analysts back when this first started to crop up saying it's, instead of being backed by the full faith and credit of the U.S. government's ability to tax, it's backed by the full faith and credit of people that think Bitcoin's cool.
Yeah.
And you can't, again, all these are ways of getting back to that idea of we can't quantify what it should behave at, how it should behave.
Right.
Um, you know, if you think about, a lot of people worry that the stock market doesn't have it, is just this gamble, right? But at
Hmm.
the end of the day, stocks have an intrinsic value.
Right.
Okay. So what we're getting at there, if like take um, Apple, for instance, if Apple
Hmm.
had, if their business collapsed tomorrow, they have a certain amount of assets, they have
Yep.
inventory, they have contracts, they have things of value, and you can look at an individual company and say its stock is, if everything went to heck tomorrow for them, their assets are worth X. That's book
Right.
value, right?
Yep.
And there's underlying value to it. And then you build on top of that the fact that they should generate a certain amount of earnings, and it's just a
Hmm.
question of how much you want to pay for those earnings. And sometimes
Right.
the stock can be overvalued or undervalued, but there still is a bedrock end of the day. This is what it's worth, right?
Right.
And there is none, and that's true of bonds too. There's an income stream. That if the company doesn't go bankrupt, if the government doesn't default, whatever the issuer is, it's worth this much money every year for X years. and you
Hmm.
can evaluate the risk that you're taking of whether they'll be able to make those payments, but there is still something there that we can look at and say it's got value. And there's just none of that with Bitcoin.
Right. I mean, value of Bitcoin is what somebody is willing to pay you for it.
Right. Right.
If nobody wants to pay you for it, then the
There's
value is
no
a
right.
beanie baby.
There's no underlying value. Exactly. Exactly. So
So, I mean, there's been some pieces out. We don't have to go through all this. We'll put a lot of it in our show notes. But,
yeah.
Vanguard's got its take very similar to East Bay about, the risk without necessarily the reward, the cybersecurity scares going back to FTX. One of the most interesting things to me about the whole SEC Bitcoin ETF piece is that Vanguard actually came out and said, we're not even going to allow people who have accounts with us to buy those. So
Hmm.
they're taking a pretty firm stance on it.
Yeah.
And,
Yeah.
that's something that is kind of against the grain.
Yeah.
It's somewhat in their nature. They've done similar things in
Yes.
the past. As far as like refusing to allow things like government plus funds, tactical allocation funds,
Hmm.
short-term multi-market income funds, and
Or
so
leveraged. Yeah.
leverage funds. Interestingly enough, a lot of those things ended up having some really bad results for a lot of people. So this is
Yeah.
just
And
another one on the list that they're
and
not comfortable with.
so here is one of the major players in creation of investment vehicles that could make millions of billions, I don't know what, how much they would
Yeah,
stand to profit by issuing ETFs. They are basically saying in the long run, this is not in our client's best interest to allow this.
right.
And we don't want, even if we would make money on it, we don't want to be part of that.
Yeah,
And sure, in the long, maybe they'll be right, maybe they'll be wrong, but they are taking a very strong stance that is no doubt costing them money in the short run.
right.
So,
Absolutely.
to me,
Yeah,
that's a pretty, and yeah, like you pointed out with those other examples, I think if there's one investment producer out there, companies that create investment vehicles and make money by you buying them, that tends to take their duty to their investors seriously, it's Vanguard.
right.
You know,
Absolutely.
so I think
Yeah.
that's a pretty telling um, take right there.
Yeah, not
You
very
know,
often that you see like a company like that willing to take a stance to
yeah.
essentially not make money on something that
So
really doesn't involve risk to them, right?
yeah. So here's a hypothetical. Let's say one of our clients calls us on Friday and says, "Hey, I know how you feel about this. I know it doesn't fit with your investment philosophy, but I really want to own some Bitcoin. I want to be part of this, my take on it, I'm pretty sure, we didn't talk about this ahead of time. I'm kind of pulling this out of the blue for you, but I think you and I would both agree it would be very similar. We've got clients that like to go to the casino. We've
Yep.
got clients that buy lottery tickets.
Yep.
Just like anything
Collectibles.
else, right? Collectibles. Yeah, I don't anymore, but I used to have a client who loved collectible cars. Very hard to make money on collectible cars, you
Yeah.
know. Um, but he liked them. And I've got other, we both have clients that spend money on things that have some value, but they're probably not going to like change their retirement. And I think,
Right.
you know, it comes down to me, it's more of a budgeting question than an investment question at that point.
That's a
Would,
great point.
more just like, is it okay for you? Can you afford to go to the casino once a quarter and spend $1,000 hoping you make a half million? If that doesn't hurt you and it's valuable to you,
Right.
go do it. If
Yeah.
buying, 1% of a Bitcoin ETF in your retirement account isn't going to change the trajectory of your retirement, and it is super meaningful to you to participate in that for whatever reason,
Yeah.
to me, then at that point, it's no different than somebody that says, "Hey, my cousin's really involved with this company, and it sounds great, and I'd really like 100 shares of that company just so I
Right.
can say I'm part of what he's
Yeah.
working on." There's nothing wrong with that. That's
No.
fine.
Yeah, I think for our listeners at home, what I would equate it to your point, Dave, is like, okay, if I've got this portfolio and I took a $10,000 distribution, would it ruin my retirement
Right.
trajectory?
If that
No.
money just
Okay. Well,
yeah.
then a
Yeah.
$10,000 investment in Bitcoin
Yeah.
isn't going to
Yeah.
hurt you.
Yeah.
It
It's a
might work
budgeting
out, it
question.
might not, but it's not going to hurt you, right? And so that's
Right.
kind of how I would think of it in terms of this is a
Right.
distribution, this is a use asset. If it works
Right.
out, great. If it doesn't, then we're not
Right.
hurting your long-term
Right.
trajectory.
Yeah, but you and I are not going to then, like at our next our next financial planning review, say, well, that 10,000 in Bitcoin should be like 20,000 by year,
Right.
2030,
Yeah.
and that's going to fund juniors college. That's
Right.
not going to happen. So
No, that's completely separate at that
yeah,
point.
it's
We
as
don't
far as
even
I'm
think of
concerned,
it.
it's gone, right? If you
Right.
come back,
Yeah.
it would be no different if you came back to me and said, "Look, I doubled my money 5 years from now." It'd be no different than if you had gone down to the corner gas station and bought lottery tickets with it and
Right.
happened to win.
Yeah.
Yeah.
It's an interesting point because most people that take money and go to the casino don't ever come back to me to invest the proceeds. So
I had that happen once. I had that happen once. It was interesting. That's another story for another podcast because I learned a lot of lessons as a first year, second year investment advisor.
yeah, I bet.
But
Very cool. Well, hopefully, we answered some questions around Bitcoin and how it relates to your retirement portfolio. If you have questions, please shoot us an email at info@srbadvisors.com. Dave, as always, it has been a pleasure.
thanks, Nick. Talk to you later.
This is a Zedia Media production.